All right, traders, welcome to today's webinar event. I am your host, Sean Kozak, president of Neurostress Trading Academy. And I want to welcome you to today's webinar event on Delta spread analysis. Now, for those of you that are joining us for our first time, I always like to welcome you into these events. We try to be as education-based as possible. And we always like to gear the discussions to the audience. Before I go any further, can I just do a quick test of picture and sound? Want to make sure that everybody can see the screen and hear my voice. That way I know to carry on. Excellent, guys. Couple ground rules. As always, when we do these events, I always like to make sure that you know that you are free to ask questions. Please type them in the chat box. If you have to leave at any time, please note we are recording this event and I will provide it via email after with all the links to any offers and details. The big topic for me though is who you are, right? Has anybody in here ever looked at studying deltas or done any type of volume analysis? Maybe you can tell me in the chat box if you've done any work on delta analysis or any volume spread analysis, anything to do with comparing volume data to timing entries, et cetera, et cetera. The reason I ask is that's exactly what we're going to be doing today. Is we're going to be using what I'd like to think is our own engineering of order flow and volume to simplify the most important concepts around delta and volume analysis. Okay. Now, for those of you that know, we have to cover a quick disclaimer. As always, please take a second to look at the risks associated with the business. We are not here to advise or instruct. We're here to provide education and resources, right? And once you understand and accept that, we can move forward. So this is probably one of the funnest webinars I could do because I've spent a lot of time studying order flow and volume. And for those of you that have been in our trading rooms before or been to any prior educational events, the goal for me here is to give you as much information as possible so that you can understand the concepts and put them to practice. Okay, so I'm going to give you an overview on order flow. There's going to be a deep dive on deltas and volume. Now, what I'm going to do is I'm going to talk to you about what we have coined as delta spread analysis. We have engineered and pioneered delta spread analysis. There's a big difference between delta spread analysis and volume spread analysis. This is a hybrid of it. And we're going to talk about that here on the charts and in the examples, right? I have developed a step-by-step process on how to use delta spread analysis properly for those of you that are looking to take this information and put it to use. And what I've done is I've basically taken some of the details from our live trading room and I've brought it into today's webinar so that you can understand how we're actually using this type of analysis to trade with it. I actually took a trade on crude short today using delta spread analysis to our advantage. It was a great profitable trade, and we'll talk about that here in just a moment. Okay. Now, has anybody in here ever looked at volume spread analysis, VSA? Okay. Anybody in here ever looked at volume spread analysis? Type a yes if you've looked at VSA. Volume spread analysis has definitely got its place. The difference with VSA and delta spread analysis is that we're actually combining deltas and volume, where volume is just simply looking at volume. Okay. And so what we're going to do here is we're going to talk about this, but before I go any further, what we need to do is we need to go into a couple concepts. Whenever you come to a webinar, what we need to do is we need to identify what we're trying to accomplish here. I'd like to think that timing your entries for better risk, location for entry is absolutely critical, and then finding ways to increase the probability using clues and data. Okay, so the point of this is that's exactly why we built delta spread analysis. because we're able to quantify the details so that we can put it into practice. Okay. Now, a lot of times what happens, and I'll simplify all of this information, is we take what's could be very complicated and we make it even more complicated. Now, the end result is feeling overwhelmed and we left where we started, right? And the reason I say it like this is order flow often leads people down that path. Order flow to me can be as objective or as subjective as you make it. It really depends on the user, really depends on the purpose and the integration as how it's being used, okay? Now what I'm going to do today is I'm going to integrate showing you the print profiler software and also the Delta spread component of it. And we're going to look inside the data. We're going to look at how to time your entries. And then I'm going to show you how to be able to look at why this is really, really important for you to look at either trading it independently or integrating it into any strategies that you're using, especially if you're levels trading or if you're somebody that's looking to wait for the right time to execute. This is exactly why you would want to use this type of stuff, okay? So the biggest thing for me is talking about the data. When I first started trading, I was looking at random price charts, 5 minutes, 15 minutes, 30 minutes, you know, hourly charts. Then I started looking at, you know, smaller time tick charts. And next thing you know it, I was looking at Renko bars. But they all have the same thing in common. They're just price bars representing data. And what ends up happening is that what most traders don't realize, there's a lot going on inside these bars that nobody really knows about, right? And really, it's not going on inside the bars. It's going on at the exchange. It's going on around the collective consciousness of the financial trading arena. It's the result of all of us. And so what ends up happening is we get tunnel vision, especially day traders, where we look at price and we look at structure and we look at all this and we look at all that. But what ends up happening is we lose sight of what's really important. What can the data do to help us, right? Well, before I can show you the solution, I think it's important that you understand the process, okay? Now, the process is very simple. It starts with what we call inventory, normally known as the Superdome or the ladder, the price ladder. And what normally ends up happening is, you know, traders, you know, when they start seeing order flow or they start thinking, okay, order flow, it means I got to learn all this stuff here. I got to learn all the numbers. I got to start looking at the dome. I got to start reading this information. But really all this is what we call pending inventory. I like to call this as inventory, okay? And inventory basically just means orders waiting to get executed and orders that are basically waiting to be filled. Now, let's say you and me, you know, let's say we're getting ready here and we've got a couple orders up here to go and sell, or we want to buy down here, okay? And then all of a sudden your phone rings or something happens, or maybe you get filled on another trade and you decided to say, okay, well, I'm not going to take that trade anymore. And I'm not going to take that trade, and you pull your orders. Well, what ends up happening is your orders disappear off the queue and it's no longer in the inventory, but, you know, has nothing relevant. There's no relevance to how that impacts the market. It just means that this is what we call intent. You're intending to do something, but it hasn't really happened yet. Okay. Now what ends up happening is, let's say you execute, okay? Your orders get executed on the inside bid and offer, okay? And they get filled in the market. Well, then what happens is they get transferred over to what we call a time and sales window or a tape. And this tape ultimately tells us the receipt. It's kind of like going to a grocery store and you're basically getting a receipt for your transactions. You're getting a receipt for your business. You're getting a receipt for what you bought and sold, how much you paid for it, the quantity, the time in which you purchased it or sold it, right? That's exactly what the time and sales is. Has anybody in here ever tried to track the time and sales? Can you tell me if you find it overwhelming? Give me a yes if you just find watching the tape overwhelming. I don't know if anybody here has ever done that before, but I'll tell you right now, to me, it's a big what, right? Because to me, it's an acquired skill. Exactly, Joe. Reading the tape is it's a skill set on its own. And if you're going to be a tape reader, you're just a tape reader, right? Because it's super fast and there's a lot of details in there that have to be picked up, and most people cannot do that to the human eye. Now, what we've done, and many platforms has done this, and there's many other tools out there that can look at using order flow charts. What we've done is we've really simplified the process. We go from the inventory, okay? We go to the inventory to the time and sales, the time and sales to the price chart, and then what we call this is we call this the print. Now, the print is really just telling us the amount of buyers and sellers at every price data coming from the time and sales. That's really all this is. And every single price bar, okay, that happens has two sides of it. Inside the market, inside the exchange. Because remember, a price bar is just there to dictate what price is doing. It's a visual representation of what is happening. But what needs to be understood is that price moves diagonally, right? Up and down, up and down. And so when buyers go to the ask, it's aggressive. When sellers go to the bid, it's bearish, right? So let's take a look at this. You got price coming down here. They're moving up to the bid. They're moving up to the ask. Sorry, not to the bid. They're going up to the ask. They're going up to the ask. They're going up. You can see the aggression in the tape. When sellers are attacking the bid, they're coming down to the bidding price, right? They're coming down, they're coming down, they're coming down, right? So what our software does is it tracks that aggression. But this is not a webinar on reading the print. This is a webinar on reading the net relationship to the print. So let me kind of go back to this. The reason I asked you if you felt reading the time and sales was overwhelming, and the reason I asked you if you felt that this was, you know, you want to simplify this equation, is we need to look at what is the data telling us, right? Like all of these numbers in a price chart can be useful if that's your trading system. If your trading system is just reading the numbers and reading the order flow, and you're an order flow trader only, then that's a different skill set. And we've done several webinars on that, and there's definitely many ways to trade that effectively. But today's webinar is not on reading order flow. Today's webinar is reading on Delta. So let me kind of explain what ends up happening with the Delta, okay? Inside every price bar, there is two sides to it, okay? And depending on if the buyers are going to the asking price or if the sellers are going to the bidding price, one side of these equation should end up on the winning side, right? Positive net delta means the buyers were on the winning side. Negative net delta means the sellers were on the winning side. So if we go in here and we take a look at 99, that just means that the net relationship to all buyers and sellers was positive. It was a positive number. However, if we go into the selling side of the equation, this 180 on this example, okay, means the net relationship was negative. Now that's a mathematical equation that's done automatically by our software. But what I want to talk about is what that looks like on a price chart, okay? So when we look at using this kind of a concept, okay? Step one, inventory. Step two, time and sales. Step three, the price charts. Now what I've got here is I've got the print profiler and the print lean. When you use our print profiler software, you get both. You get the print profiler and you get the print lean. Now the difference between the two is what we've got on the print profiler is a copious amount of order flow data combined with a whole lot of other volume profile components inside of all of this, and this is all about order flow. This is all about order flow, the Print Profiler Classic, okay? You can see here that on the print version, on the lean version, all we're doing is we're controlling the print, and we're also controlling the inventory. And the reason we did this is originally this was our flagship. The Print Profiler was the flagship product. We leaned it down for specific use. However, you can use both to your advantage depending on how you choose to use Orderflow or Delta. Now, what I want to do here, okay, is I want to talk about the deltas. I want to just talk about the net relationship, and we'll go to the actual classic so you can see this, okay? We go here to the classic version. You can see above each price bar, okay, current price right here at negative 28. You can see that we had a positive delta up here, and then we moved to negative delta, negative delta, negative delta, then positive delta, then positive delta. What this just means is the relationship between the buyers and the sellers on each bar, okay, is either positive or negative. Now, sometimes you will have a positive bar with negative delta, and that's what we call random inefficiencies. Sometimes you will have a positive delta with a negative bar, okay? Normally what this is we call it flushing, or we would normally call it to be absorption, right? In the market, normally you'll see a correction happening after that. But the point of the matter is that it's not normal. For you to see down bars with positive delta or up bars with negative delta, it's not normal. But it happens sometimes. And it happens normally when the market's correcting or absorption's taking place. So the biggest thing for me is understanding that I don't like to complicate things. When I use Delta and Orderflow, it's because I've learned over the years of studying this stuff that I really only want to look at what I'd like to think is the simplest way to use the most advanced things. Let me repeat that. I like to take all the advanced stuff and simplify it down to the most important concepts, okay? So the best way that I can tell you how that's been done is through Delta spread analysis. And I used to trade order flow. I'll give you an example of, I used to look at, imbalances. I used to look at zones. I used to look at all this stuff, and they're all relevant to some degree. But one of the things I've learned is I really want to look at the biggest clues of the market, okay? And that's what we call Delta spread, because everybody's looking at the net relationship to the order flow. When a price bar is unfolding, nobody really knows what's happening in it. But when a bar is closed and Delta is confirmed, we know what's happening. So one of the things that we've done is we've created what we call a heat map. And the heat map, okay, is ultimately it's color grade. It's a way for us to grade the impact of the deltas. So let me give you an example, okay? If you're looking at the market going up, right? Let's just go up, 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 pull back, up, 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 okay? You've got positive delta, positive delta, positive delta, right? Let's just keep going here. This is the real important part of the webinar right here. This is really, really important. So if you're paying attention, this is really important right here, okay? You got all those deltas, okay? How do you tell me which bar is most important? Other than if you're using other types of indicators to talk about levels or reversals and stuff, but that's not the question. The question here is, how can you determine out of all those up bars with positive deltas, which bar had the biggest impact? No, Richard, it has nothing to do with the longest range. You want to know why? Because all of these are the same bar size. The difference between delta spread analysis and volume spread analysis. Volume spread analysis can only be applied on variable range bars or price bars that have different size range. That's the whole point of volume spread, because you're studying the spread of price according to the volume. The difference between delta spread analysis and volume spread analysis is we don't study the spread of price. We study the spread of the deltas. And we study the impact, and we compare every single delta against each other to see, okay, based off this market's normalized mathematical order flow process, which delta stands out like a sore thumb. Same thing on the negative side. You got all these negative deltas, okay? How do you know which one is the most important bar? Or at least the one that has the most impact? And so what we've done is we've made a color gradient scale called the heat map. This is the heat map. There's these color grids down here. We call this the heat map, okay? And what the heat map does is it tells us dark to light colors. The color of the heat map is best described as the impact of the deltas. So dark green and dark red is very strong impact, which means this bar right here is significant compared to all those up bars and all those up bars. This bar right here is significant compared to all those down bars and all those down bars, and also all these other down bars and all of those bars. We're not just comparing it on each leg, we're comparing it to all delta, guys. The point of delta spread analysis, it's a mathematical study of delta analysis. So the reason we call it the heat map is because we're color coding the impact. Now, the reason why I love delta spread analysis so much is that we didn't just stop there. Well, actually, hold on, Marcos. It's combination. Marcos is saying, is the heat map volume? It's delta and volume. So let me kind of explain something. The color of the heat map is reading the delta impact. The size of the heat map is measuring the spread of volume. So this is why this was, I guess you would say, 5 years of my work of bringing together all of volume and order flow analysis into one really, really powerful tool. Delta spread heat map, when we talk about the size of the heat map, the height of the volume bars, what the height is doing is it's telling us the impact of the volume, not the impact of the delta. So there's a difference between delta and there's a difference between volume. Delta, okay, equals the net change in order flow. Volume, okay, equals the amount of participation, okay? Get the point. What we're doing is we're color coding the heat map to measure the delta, and then we're measuring the spread of volume to measure the VSA. So the reason we call it delta spread analysis is because you cannot measure the spread of volume through deltas. You can measure the spread of delta through delta, but you can measure the spread of volume through volume. And when you merge it, we get delta spread analysis. So that's exactly what this is. We're measuring the impact of volume and we're measuring the impact of delta. And that's exactly what we did. Was we said, okay, how do we take this information and really, really drive it home? Well, the key is to be able to use this to look for the most important clues in the market, because many of you guys aren't just using delta or order flow or volume by itself. You're most likely looking at levels, okay? You're most likely trading support and resistance, supplier demand, market and volume profile, or maybe you're just looking at order flow. The point of the matter is that you can use this to enhance everything that you're doing, and I'll show you how. Okay, we're going to show you how. We've created what we call the Delta spread analysis heat bars and the heat map for you to do this. So let's go into the actual charts for a second. And I just want to show you this, okay? Take a look at the color of that bar and the color up here. Okay? I want you to take a look at that. I want you to take a look at the color of that bar and the size of that heat map. Okay? I want you to pay attention to what happens when things stand out. Okay? Now, for us to just look at every single delta bar is not an edge. There's no edge to that. Okay? There is no edge to just buying and selling every single flux of order flow or delta in the market. That's not success, and that's not quantifiable. But what is quantifiable is when we get to areas of importance. Okay? Let's say you want to trade a resistance level. Okay, let's say that's a resistance level. And it could be a fib resistance. It could be a supply zone, a value area high. It could be a pivot. I don't care what you're looking at. The point of today's webinar is how do I look for clues in the data to say, okay, wait a second. I'm at resistance right now. And I need to start identifying things that are really important for sellers because I'm trying to sell here. And that's exactly what we're doing. We're doing confirmations with selling clues. We need to be able to look at clues in the data. So if prices are coming up and coming up and coming up and coming up, but I know that I'm at a key area where I want to be selling, can I ask you guys a question? What type of clue would you be looking for? Would you be looking for buying delta, or would you be looking for selling delta? Would you be wanting to see some type of serious selling clues or buying clues? Victor says selling. Anybody else want to take a stab at that? Let's draw a little line in the sand here. Let's draw a little box, just like this, okay? And let's say we're coming up here like this. And you're sitting there and you're saying, okay, Sean, that's a value area high. And that's an expensive price point. And I want to look at selling this when price gets there, okay? Well, if we're going up, and you see that, and then you see that, and then you see that, and then you see that. What does that tell you? Like when you see that bar, because I can tell you right now, if I go in here and just turn everything off, all you have is a down bar. You have odds of a down, you have a down bar. So you're saying, okay, we're just getting a bit of a retracement or the bar is flipped, right? Let me just go a little bit further. How do you know anything? Like this, to me, this is the whole point of the discussion. If I know that this is a resistance level, maybe you're using other indicators, maybe you're using price, maybe you're using trend lines, whatever. How does anybody know what's going on right there? You can't. The data isn't, you don't, there's no way for us to know that. So what if I said, well, let's go here and let's try to read the dome and the tape. How can you do that? You can't. So let me just add the deltas back in here. Net delta. Okay, so let me ask you a question. How do you know if 566 and 320 is important? I'm pretty sure that all of us do not sit here with a calculator and start punching in delta numbers and subtracting numbers and comparing it. We can't. We have nothing to compare it against. How do you, the human mind, know that 566 is important compared to all of that other delta that was down here? How do we know that? How do you know that 566 is anything of an importance compared to all the negative delta? And that's exactly why we started doing this, was we started mathematically comparing, okay, putting this data in here and looking at being able to quantify. Let's just put the Delta heat map back on, okay. Right there. Right there, what I'm able to see is that price has come up into an area of resistance. And what the delta is telling me is that sellers are now stepping in and the clues are right here. It's not so much these other delta bars, but what's really more important is that you can not only see the clues in this delta bar here, you can see that we're getting up bars with negative delta, and then it's being followed with delta spread bars. That means that buyers are being absorbed by massive amounts of sellers, okay? So as prices are going up, it's still going up, and it's tons of negative order flow. And then it's being coupled by really, really strong deltas, okay? Well, I took this trade today, okay? I took this trade today. There, okay? I took that trade today because that met my criteria for us in the trading room to sell this. And I told the traders in the trading room, I said, we are at a key level of interest. We are now starting to get the patterns of delta setting up for a location. And I said to the traders, if we can get the qualification at that level, I'm going to use the delta as my cue that, okay, sellers are stepping in. I'm going to wait for the pullback. I'm going to get in here. And I did that. Now, it may not look like a big trade to anybody, but it's a profitable trade. And it was a trade that meets a strategy that we teach using delta. And the reason I say this is because we don't just want to rely on price alone. We want to use it to our advantage so that we can build more confidence. So let me give you an example here. Okay, I'm gonna pull up a chart, because I like to put things into context. I like to really kind of drive things home and you know, find a way for us to you know, kind of make some type of a comparable story, right? Order flow and delta, okay, can be used for stand-alone signals. They can also be used for confirmation at levels, timing entries, building trust in your execution, and more importantly, trade management, trusting the trade. I have learned that delta for me has been more delta and order flow. My own experience has been order flow and delta are for trade management. Entry and trade management. Okay. I don't just use delta and order flow. I rely on it. I personally cannot even look at a price chart without it anymore. I can't. Like, I just, knowing what the data tells me, I don't know why I would ever want to, because it gives me the confirmation to have evidence and information that 90% of traders are at a disadvantage that they don't have, right? So a couple things that I like to do is I like to kind of put things into context. One of the things that we do in our trading room, and I like to bring things more to an application-based discussion rather than just education and here, look at the nice finding software, is what we do in our live trading room is we use levels a lot. We look at market and volume profile. We look at supply and demand. We look at Fibonacci. We've got traders that look at nice round numbers. And what ends up happening is we use this, okay, for higher time frame analysis. Okay. And then what we do is we then go down and we use the smaller time frame charts with order flow and delta, because it's really designed for timing execution. Can anybody agree that that's kind of the way they've looked at it, or has anybody in here ever tried to study this? Does that kind of make sense to you? You know, trying to use order flow and delta on higher time frames can be very overwhelming, because, you know, they got to load a lot of tick data, got to load a lot of information. So the point of the matter is that what I've done, and this is kind of a step-by-step process that we teach in our trading room, is what we do is we locate levels of interest. We want to trade based off of areas in which we want to do business. And then what we do is we use the smaller time frame delta to time our entries. Now, in our trading room, we use a timing chart, and that's where we apply the Delta heat map to it. We apply the timing chart, and we convert time to range or Renko charts because we use it for reversals. And the biggest thing is that, you know, what we're doing is we're just following a step-by-step process. We're locating levels, we're waiting for price, and then we're executing, okay, using delta to time our entries. So this is another great example of how we would bring this all home. This is a slide that I cover often in our trading room. Is these are all of the time frames that we trade on right here. These are all the time frames that we trade on all of the different markets. Okay, we trade here, all the different markets that we trade. And this is an example of a value area low that is depicted from our profile software, right? Well, you can see the first time we had delta step in here was right there. So the first time price came into a value area low level, it came down, and then all of a sudden, boom. That was the first clue that the buyers were stepping in at the lows. This is one way to use it. There's many different ways to use it. You might not trade profiles. You might trade other levels. But I can challenge you this, to look at the levels from an objective perspective, so that when you're trading, you're not just blindly putting your order onto your chart. I would really encourage you to use some type of quantifiable reason that gives you a way to look inside the information, because it's going to help you build trust. Okay, it's going to help you build trust, and it's going to help you believe, right? Like, how many of you guys trust what you're doing right now? Can you guys just be honest with me and tell me, can you give me a yes or a no? Do you have a lot of trust in what you're doing? Yes, no. Anybody here struggling still? Yes and no sometimes. What about belief? Okay. Do you believe in your abilities? You'd like to trust some more, Joe says. So, Richard says. Victor says, I believe. Erwin, yes. Edward starting to. Daniel says no. Okay. Well, the point of the matter is that when I don't use delta or this type of information, it's harder for me to trust or believe it. So that's why I like to put these events on, and that's why we actually built the tools, right? That's why we actually built the tools, is so that we can trade better, right? So the point of the matter is that we don't need all of that other stuff. We just need, okay, to look at key levels and be able to rely on them. Now, maybe you guys can tell me a market that you're looking at. You want to give me a market that you're looking at? Crude oil, the NASDAQ, YM, you know, I don't have any Forex data connected right now. Gold, the NQ, on a range or a Renko. Give me a range or a Renko. You tell me the time frame, you tell me the fractal, and I'll look at it. Okay, so if we're looking at a couple guys saying gold on what? Who you got? A couple people here asking for gold. Tell me gold on a Renko. John wants to look at crude. Okay, so we got a couple people on gold. I'm going to switch over to gold for a second. Okay, let's go to gold. Okay. And let's go in here to the data series. And we're going to just go to a 5-tick Renko and a 10-tick reversal. And we're going to just hit OK. Okay. So what I want to do is I want to just talk to you. I took a trade today on gold. It was an SD volume zones trade. So it was a zone trade off of a supply and demand imbalance, okay? There was a demand zone that was approximately right about there, okay? And for those of you that were in the trade room, you watched me scalp that trade, okay? It was a very quick base hit. Now, when price came into that trade, do you see any delta? I was not trading delta on that setup. But if you were to use delta, watch what happens. That's when delta came in. So if you were someone that says, you know what, I just want a little bit more confirmation. I want to see the order flow coming into the market, okay? Then you could have looked at entering on the delta bar instead of the first touch like I did. There's nothing wrong with one or the other. It's just how you choose to trade it. But this tells me a lot of information. This tells me that price came into a demand zone and buying order flow stepped in with a lot more force. Okay. Look at the reaction we got after the deltas. Okay. Now, this has nothing to do with where should your stop loss be, where should your target be. This is a clues webinar. This is a clues information webinar. Let's take a look at resistance up here. You can see that there was support and resistance here. We had support, resistance, okay? Well, coming into it, okay, you can see that that's resistance. If price is coming up to it, what about that bar right there? That's when you can start to see the sellers are stepping in, okay? So what does the delta bar tell you? The delta bar tells you, that's a great question, Richard. I'm glad you asked it. The delta bar tells you a couple things, and I'm going to tell you right now what it means. Number one, impact of delta. So the impact of the order flow. Impact of the delta, okay? Number two, it's the impact of volume. So what this means is these bars are more powerful than all of the other down bars on the chart right now. All of the other negative delta bars. It's comparing these deltas to those bars, to those bars, these bars, all of these. Every negative delta. It's telling me that it's comparing all this. So let me ask you a question. If you're at a level of resistance, wouldn't it make sense to be really kind of paying attention to bars that have a serious impact of delta and volume? So instead of us worrying about it just being a down bar, we have a down bar that is giving us saying, yes, the delta is very strong and the volume is very strong compared to the other volume. Does that make sense? You can change how far back you want to look, Jeff, in the settings. Okay. So if we're coming down to a support level, we start seeing this down here, like we were at. That's the first bar that told us buyers were stepping in to some degree with a lot more force. Okay. So the point of this discussion, okay, is for you to be able to decide, are you going to look at using it just as a standalone tool set, or are you going to look at it to combine qualifying probabilities for execution? Okay. What about the up bar with 334 on top? Let's go back up here. The up bar with 334 on top. Which up bar are you talking about? 184 on top, you mean? This one up here? What I don't, okay, no, to the right. So the up bar, let's see, to the right. I don't see anything to the right over here. If you want to go down, we can go down. I'm trying to figure out where you're talking about here. Take a look at the deltas coming in here. This one here looks like 334. Yeah, it's probably just to see. Take a look here at the clues. What started happening after Delta started stepping in? What's more important is what's happening at the levels. It's not so much the Delta by itself. It's the location of the deltas that matters. So let me kind of bring this all home. If I'm in areas where I expect buying to be, I want to be paying attention to clues. If I'm expected to be in areas where selling is expecting to be, I want to be paying attention to clues. I don't pay attention to selling or buying. I'm paying attention to negative information at selling areas and positive information at buying areas. Because if not, you're looking at it backwards. It's the clues that matter the most at the right locations. Okay. So a couple things I want to talk about is, let's go over here. I want to show you guys the training inside of the members area for a second here. We're going to go into the members area for a second. And I'm just going to pull up a page here for you guys. No, it's not contradictory. It's not contradictory. In fact, that's the difference between an inexperienced trader and an experienced trader. What we're doing is red doesn't matter in buy areas. So you shouldn't be thinking like that. And that's the best, I think, Richard, that's the best thing you could have said, because it helps a lot of people think like that. When you're at selling areas, buying information is out of place. It's the flush. It's kind of like the inexperienced traders coming in or the big traders flushing positions. So the big thing for you is when you get to an area of selling, all you need to think about is waiting for the sellers to step in. When you get to an area of buying, just because you see red doesn't mean you should be worried. You need to be seeing green and feel confident, because the green is confirming the area. The red is confirming the area at the selling and the buying location. Okay. So these are great questions, Richard. We'll get into them in a second. A couple things I want to talk about is we have a lot of usage and settings training videos for the software. And when we go through this, there's user manuals that break down a lot of the different features inside of the indicators, okay? Richard's asking a great question. What if it blows right through? Well, the point of what I was explaining is I was looking at a demand zone here. So it could always blow through. We have no control over what the market does. The only thing you have control over is your risk and your money management. So if you look at, I was planning on entering here, my stop loss was down below the zone. So the point of the matter is that it really depends on how you're trading it, right? If you have a resistance level up here and your stop loss is over here, if they blow through, they're blowing through anyways. But the point of the order flow is to tell you that the sellers are stepping in, that the buyers are stepping in. So this is the point of the clues in which you need to have to your advantage. Because if you don't, you're just looking at random price bars. They're going to blow through anyways if they're blowing through. Okay. So those are great questions, though. And this is the whole point of these events, is people have great questions, and a lot of people are probably asking that, right? Totally improves probabilities. It also, remember what I said about this? It's about confirming levels, timing entries, building trust in the execution, helps you with trade management. Okay. I use it for trade management. I use it for trust. I use it to be able to execute and then believe in the follow through. I don't rely on it to be the end all be all of everything. It's not meant to be that way. Because order flow in Delta is tracking net relationships to volume in Delta. Okay. So let me go in here, guys. Let's go in here and talk about, okay, the pricing of the tool so that you understand exactly what it is. Okay. So we do webinar discounts whenever we put on these events. It always comes with 2 computer licenses, email support, phone support, remote support if you need the installation. Obviously, we cover training manuals, usage and settings guide. The software is available for Ninja 7. Ninja 8 is the Delta bars. Ninja 7 is the classic version of the print profiler. Okay, so Ninja 8 is only available for that type of information. What I'm going to do is I'm going to put the chat box link in the chat box. Okay, and what I'm going to do is I'm going to run a poll, because one of the things that I think is really important is that you get a demo with your markets. Okay. If anybody in here would like a personal demo of the print profiler, and you would like for somebody to log onto your computer with you, and you would like for someone to discuss your markets, your chart types, your time frames, right? The best thing for us to do is for us to be able to get on a computer with you and to be able to help you, right? To be able to be able to help you look at the levels that you're trading, right? Maybe you've got some support and resistance levels, or some supply and demand or volume profile levels. And, maybe what you want to do is you want to see, okay, well, how could the Delta have helped me time my entry? Or where could I have gotten in for a better risk management decision as opposed to just taking the trade, right? So that's why I really encourage you to fill out the poll. And what we'll do is we'll have Jeff contact you. He'll schedule a one-on-one. All I ask is that if you do request a demo, that you show up. Do not waste his time or yours. We're all professionals here. It's important, right? And that way we can go over your markets and we can go over your details, right? Okay. Let me ask you this. Did anybody learn something today? Did anybody learn anything from that, right? On understanding the impact of volume and the impact of deltas? Okay. I use it in our trading room every single day. I personally need it, and I'm just sharing my own experience with you. Okay. So hopefully you guys found that informative, and you can rely on some type of deep dive information on that. Okay. I will end with this, guys. I will end with this. Okay, let's go in here, and while we leave the poll open, you guys can let me know. One thing I want to make sure you understand is the print profiler comes with 2 versions, the lean and the classic. The classic has volume profile information in it. The lean, okay, the lean version is strictly Delta and print. So if you're somebody that likes volume profile and order flow, you'll use the classic. We do not have enough time in today's webinar to cover all of that. Today, we just specifically looked at the Delta heat map, okay, and the process from going through this, okay. So hopefully you guys found that informative, and you guys have any questions, we will put this out after. If any of you guys are interested in the ongoing winning streak that I've been on, I got a couple traders asking, how have you been trading and all that stuff. I've been trading quite well over the past couple weeks, guys. I've been able to increase my winning percent. This is a combine account. I'm doing this with my cognitive risk reporting pilot study that we're doing. So this has been a combination of I use the Delta heat map on all the trades I take. I use the order flow on every single trade I take. Is it the only tool I use? No, but it is definitely one of the most important trade management tools that we have in our trade room. So this has just been the performance breakdown today. I took 671 out of the market on 2 trades. My profit factor has been able to jump up. I've been able to get my winning percentage up over 65%, which is nice. I'm shooting for another winning day tomorrow. If you're interested in learning how to trade with this stuff and you want to come in and trade with us, you can definitely do so. We run a trade room in the morning. You can join us, but we'll be using Delta. We'll be using this information tomorrow morning when we trade futures, right? Actually, 8K. Well, it's still not done yet, Jeff. It's still not done yet. That's only the 1st to the 22nd. I didn't trade yesterday, and there was a holiday last week, right? So that's on 13 days. I've done 55.80, trading 1s and 2 contracts. Yeah, the monthly rate down here, if I kept that rate up, that's what I would be doing. Trading 1 and 2 contracts. Normally 2. There hasn't been too many times where I traded more than that, other than one time I made one mistake and I leveraged down on a bad trade, but that's human error and that was my own issues, but we're all human, right, guys? So, the end of the day, guys, hopefully you found that informative. I'll end the poll. Thanks for joining me. I'll put the link in the chat box here for you guys to have, and we will send out the recording. I want to thank you for being here, guys. Hope you found that informative, and we will see you guys bright and early in a trade room if you're joining us for a guest pass. Take care, guys.